All right, so let's jump right into today's market action. November 19, 2024. And we're going to use the EQAI Morning Briefing today, kind of like our roadmap. It's like having, one of those top market analysts just like right there in your pocket.
Yeah.
Breaking it all down for you without all the Wall Street jargon and stuff.
Yeah.
What really jumps out at me right away from this report are the major indices and how differently they're moving. Bitcoin's doing its thing. And, there's even a prediction from Goldman Sachs about where the S&P 500 could be headed in the next couple of years.
You know what's interesting about those differences in the indices, though? It really makes you think, is the market signaling caution or optimism?
Right, yeah. Okay, so the S&P 500 and the Nasdaq both closed up today. The S&P ended up at 5,893.6, which is a 0.33% increase.
Yeah.
And the Nasdaq finished at 18,791.8, which is a 0.39% gain.
Right.
So that little boost there seems to suggest some good vibes, especially around tech.
Yeah.
But then you look over the Dow Jones, and it dipped just a bit, closing at 43,389.6, down 0.09%. And then there's the Russell 2000, which tracks small cap stocks, and it closed at 2,306.3. Just a tiny 0.08% dip. So it's kind of all over the place, really.
It really makes you want to dig into the why behind these numbers. Like the Dow's dip could be because of those lingering concerns about interest rates and inflation that we keep hearing about, while the Nasdaq, which is, heavy on tech, might be getting that little boost from all the excitement around upcoming tech earnings reports.
Especially Nvidia.
Yeah, especially Nvidia.
But their Q3 earnings report is out tomorrow, and options traders seem to be betting on a stock rally after that report drops. So what do you think is fueling that optimism?
Well, Nvidia is pretty much dominating in AI and data centers right now, and those are hot growth areas these days. So they've got a real competitive edge that's got investors feeling good.
Now let's jump over to the crypto world, because Bitcoin's having a moment. It surged 2.4% today, hitting $92,684.05. That's a pretty big jump.
Oh, yeah, definitely noticeable. And it seems like the big driver is renewed institutional interest. Companies like MicroStrategy are really going all in on Bitcoin with their buying strategies. Benchmark analysts even called their approach audacious.
Audacious. I like that.
I know, right? It kind of suggests that they see Bitcoin as a long-term asset.
That's a great point. But while Bitcoin's stealing the show, it seems like Ethereum's taking a little break. It dipped 2.49% today to close at $3,128 at 4 hours. Do you think maybe investors are shifting to other cryptocurrencies?
It's definitely possible, with all these new players popping up. But it could also be profit-taking after its recent rise. Remember, the crypto market is known for its volatility. These ups and downs are just part of the game.
True. Okay, so let's move from the super volatile to something a little less volatile, at least for now. Crude oil prices seem to be struggling to keep their momentum going. They were climbing, and then it's like someone just slammed on the brakes. What happened?
Well, it looks like the brakes were the resumed partial production at Norway's Johan Sverdrup oil field. This is one of Norway's largest oil fields, so any changes there, can have a big impact globally. So that increased supply is likely putting some downward pressure on prices.
Basic supply and demand, right?
Right.
More supply usually means lower prices. Okay, that makes sense. Now, for something that could have a big impact on your portfolio down the road, Goldman Sachs has made a bold prediction about the S&P 500. They're saying it could hit 6,500 by 2025. That's a huge jump from where it is now.
I think they're being overly optimistic. It's an ambitious target for sure. But their prediction is based on their positive outlook for equities. They're looking at things like expected earnings growth and the overall strength of the U.S. economy as positive signs. But, a lot can happen between now and 2025. The global economy, the Fed's decisions on interest rates, all those things can have a huge impact on whether they're right or not.
For sure. Those are definitely things to watch. So we've covered the overall market, Bitcoin's big day, Nvidia's earnings report coming out tomorrow, and even Goldman Sachs' big prediction. Now let's zoom in on some specific sectors, starting with tech, because it's amazing how much influence it has on the market as a whole.
Yeah, absolutely. Tech's always changing, always moving, which is what makes it so interesting.
Okay, so let's unpack what's going on in the tech world right after a quick word from our sponsors. Just kidding. We don't have any sponsors yet. More tech talk coming up.
It's not just the big players like Nvidia, though, that are making waves.
Right. You mentioned earlier how important semiconductors are. And it seems like the demand for them just keeps growing as technology keeps advancing.
Well, yeah, they're kind of essential for everything these days. Smartphones and laptops and cars, appliances, everything needs semiconductors. And as technology gets, more and more sophisticated and the demand keeps going up, the need for these tiny chips just keeps skyrocketing.
Oh,
So
yeah.
it's definitely a smart move to keep an eye on that industry because it gives you a good picture of the overall health of the tech sector.
Okay, so going back to something you mentioned before about the resumption of production at Norway's Johan Sverdrup oil field,
Mhm.
potentially lowering crude oil prices. What other effects could this have on the global energy market?
Well, I think it really highlights how delicate the balance between supply and demand is in the energy sector. Any major changes in production, like what's happening in Norway, it can really affect the whole industry, like a domino effect.
It also makes you think about the shift towards renewable energy sources too. Things like solar and wind power. Even though oil production is still a major focus, the push for more sustainable solutions is undeniable.
Definitely something to keep an eye on, for sure. Now, how about we switch gears again and talk about the financial sector? Things are always interesting there, especially with, everything going on in the economy right now.
You mentioned earlier that banks could actually benefit from higher interest rates, even with all the, worries about inflation. It just seems counterintuitive.
Right. It does seem that way, I guess. Because usually higher interest rates mean it costs more for people and businesses to borrow money, which can slow down economic growth.
Hmm.
But it also means that banks can make more money from the interest they charge on loans.
It's like a double-edged sword almost.
Yeah.
So for someone trying to navigate this financial landscape right now, what's like the most important thing to keep in mind?
I'd say stay informed. Pay attention to what the Federal Reserve is saying about interest rates. Keep up with inflation data and make sure you understand how all of that is influencing how banks are performing. Knowledge is power when it comes to investing.
Good advice. So stay informed, stay diversified, and keep learning. Okay, so we've explored the market, how it's doing today, and we've looked at some key sectors. But before we wrap up, let's zoom out and look at the global picture. What's happening internationally that could impact our portfolios here in the U.S.?
That's a really good point. We can't ignore the rest of the world. Right now, Europe's dealing with rising inflation, which has their central banks thinking about tightening their monetary policies, which could possibly lead to slower economic growth over there.
And what about China? They've been facing some economic challenges lately, haven't they?
Yeah, their recovery's been facing some headwinds, especially in their real estate sector, and that slowdown could have ripple effects across their entire economy and even globally.
So it sounds like there are some potential challenges on the horizon. Should we be worried?
I don't think it's time to panic just yet. The overall sentiment seems to be cautiously optimistic. I mean, there are definitely challenges, but the fundamentals of the global economy are still relatively strong. It's really about staying informed, being adaptable, and making smart decisions based on, what we know.
I like the cautious optimism. Even when things are uncertain, there's always room for hope.
What's your advice for staying ahead of the curve and making good investment decisions in this environment? Diversification is key, for sure. Don't put all your eggs in one basket. You want to spread your investments across different asset classes, sectors, geographic regions, and just as important, never stop learning. The more you understand about the markets and the things that influence them, the better prepared you'll be to make good decisions.
That's great advice. Diversify your portfolio, stay informed about market trends, and keep learning. Those are some key takeaways for our listeners today. To recap some of the specifics we've talked about today, investors should keep a close eye on Nvidia's upcoming earnings report, which is due out tomorrow.
Right, it could be a good indicator of how the tech sector is performing overall and what we might expect going forward.
It's also important to keep an eye on those crude oil production levels,
Yeah.
especially with that resumed production at Norway's Johan Sverdrup oil field. Changes in production can have a big impact on oil prices, which can affect everything from transportation costs to the stock market.
Absolutely. And don't forget about those global economic developments we talked about. What happens in Europe and China can definitely have an effect on the U.S. market, too.
We've covered a lot of ground today, and I feel much more informed. But before we wrap up, I want to leave you with something to think about. What do you think about Goldman Sachs' prediction that the S&P 500 could hit 6,500 by 2025? Do you think that's actually achievable, or are they being a little too optimistic?
That is the million-dollar question. It's a really interesting prediction, and it's definitely got people talking.
It really has. And there's no right or wrong answer here. The most important thing is that you form your own informed opinion, do some research, look at the data and see what you come up with.
Exactly. Who knows? Maybe you'll even find some insights that Goldman Sachs hasn't even considered. That's what I love about the market. It's always changing. There's always something new to learn and discover.
Well said. And on that note, we'll wrap up our market deep dive for today. Thanks for joining us on this journey through the ups and downs of the financial world.
It's been great exploring these market trends with you. And remember, the journey of understanding the market never really ends. There's always something new to learn, new insights to uncover. So keep exploring, keep asking questions, and stay curious.
Yeah, it really is like a giant puzzle, isn't it? And we're
Yeah.
all just trying to figure out, how all the pieces fit together.
Exactly.
But that's what makes it so interesting.
Yeah.
There's always that element of surprise.
For sure.
Speaking of surprises, we were talking about that Goldman Sachs prediction earlier about the S&P 500 hitting 6,500 by 2025.
Oh, yeah.
I mean, that's a pretty bold prediction.
It is. And I think, it's a great exercise for any investor to really take that prediction apart, and look at it closely. Like, what are the things that could actually make that happen? What are the potential roadblocks?
Yeah.
It's all about really thinking about these different scenarios and forming your own opinion.
Yeah, for sure. And you might even uncover some things that, even the analysts at Goldman Sachs haven't even thought about.
Exactly.
I think that's the beauty of the market. It's always changing.
Yeah.
Always keeps you on your toes. Never a dull moment.
It really doesn't.
Well, I think that about wraps up our market deep dive for today. Thanks for joining us on this little journey through the ups and downs of the financial world.
It's been my pleasure.
Exploring all these trends and data points with you. And I hope you've learned a thing or two about, what's going on out there and what to look out for. So until next time, keep an eye on those markets and stay curious.